Okay, so we've been focused on Apple and Amazon today. Both, of course, face tariff uncertainty and both reported their earnings last night. Apple, in particular, expects to incur almost $1 billion in tariff-related costs in the current quarter. Our guest says there is still room to get into tech stocks, even though many of them have bounced off the bottom. We're joined by Matt Kesar, president of FSA Valuation Service. Thanks very much indeed for joining us, Matt, as ever. Start off with Apple. We saw the stock dropping. Part of that appears to be, though, declining sales in China.
Yeah, for sure. And, I kind of prefer, I call them platform, I guess, or software companies over product companies like Apple, because they do face, tariffs, whereas a platform company, not so much. So we're kind of looking at those ones. I'm sure we'll go over some of those.
Right. Any thought, and there is Apple. It does seem as though Chinese consumers, according to Bloomberg, feel the company has fallen behind rivals such as Oppo and Huawei with its models right now. Give us your thoughts, though, on Amazon before we get on to names that you may prefer.
Yeah, so I do like Amazon. I do find it a really difficult one to understand, especially with these tariffs, because they're moving a lot of product with other people's products and not necessarily their own. So they're kind of indirectly affected, I'm going to say. Plus, they have a big business in their services and lots of other stuff. So it's a really tough one, but also a really great company. So I'm still pretty bullish on Amazon.
The Microsoft is one of your favorite names. Why is that?
Yeah, I think it's been my favorite for maybe 15 years now. I'm not sure how long it's been, but it's been quite a while. It's probably the best recurring revenue software platform ever built. It's just a juggernaut. The earnings that came out were, I think it was 16% year-over-year revenue growth. And when you're a behemoth like that, how do you keep that going? I don't know, but they do. They find a way. They find, they can raise their prices a little bit, and it's relatively painless to most of us. And they just add on their product suite. It's just one of my absolute favorites.
That's interesting. They're not just business software. They also have their big games platform now, and they have LinkedIn, and they have the AI card to play.
Oh, of course. That's all building out, and their services as well. Of course, Office, everyone's familiar with that. I don't think anybody who works in any office is working without Office. So, it's just and they're all recurring revenue. So it's just really a great business.
Meta Platforms is spending heavily on AI, but investors don't seem worried about that these days. And I'm sorry, you like the stock as well.
Well, sure. Yeah. Let's not worry about it. That's something we're encouraging. We want to see that. Meta, again, we rely a lot on our models, and our models are return on capital, cash flow, and things like that. So we need to know what the companies do and stuff, but that's not our specialty. It's kind of just looking at the numbers and crunching them. And every time they post, the return on capital goes up a little bit higher. Their cash flow's higher than we thought. I think they also had 16% year-over-year revenue growth. So, when you're this big and you're growing like that, it's really astounding numbers.
And your final among the tech giants is Apple, your final selection. You like the look of Google. I'm sorry, Alphabet. I'm sorry, I'm getting them mixed up now. I meant Alphabet, parent of Google.
It's late on a Friday. So Google, another platform company. As I said, I like the platform companies because they're not mixed up in these tariffs. Yes, they get kind of indirectly, if the economy softens and there's a recession because of that, they will soften, but they're not directly affected. There's no tariff on their products or what they're building and things like that.
Salesforce, CRM, what attracts you there?
Well, I sound like a broken record because this is another platform company. There's no physical product going between people. There's no border for them to cross. You simply sign up for their services if you like it. You pay your recurring revenue fee, and it's also a AI giant as well, and really working on big products there as well.
Let's go down the scale a little bit. Fortinet, FTNT. Remind us what Fortinet's main franchise is, and why do you like the stock?
Yeah, so that's a software security company. And I just want to talk a little bit about some of the lower market cap names, and I thought that was a great one. It's one that we own in a fairly big weighting in our mid and small cap portfolio. Cybersecurity is not going anywhere. I love their return on capital profile. Seems to be building every quarter as well, just a little bit better, a little bit better. Again, another recurring revenue kind of platform there.
And Checkpoint, a similar security name that you favor?
Yeah, in fact, I think they're competitors, so very similar profiles. Can hardly tell the difference in our work. Again, our work is return on capital, cash flow, earnings, those sorts of things. And I can hardly tell the difference when I kind of bring them up in our examination software. And another great one there.
The markets have had this spectacular rally. Let's put up a 1 year maybe for the NASDAQ. You presumably think these 6 names you've given us, it's not too late to get into them?
No, I'm not sure if I can see the 1 year chart here, but they have done well for sure. But there's been a little bit of a pullback in general in the market and in software and in technology. And with the tariffs, I get it. It's high beta names. There is some risk there. They did pull off, and when would you get back in? We were a little slow, and then more recently we were starting to get bullish, and then Microsoft came out with their report, and Meta came out with theirs, and it's like, okay, we're off to the races again. So I think it's safe to go in, despite this little bump. It's only really been 2 days, I'm going to say. So yeah, there's lots of room in my opinion.
What a turnaround in the market we've seen. Apparently we've had a winning streak of 9 or 10 days, and it's the longest in years for the US market.
Really? I didn't know that, but it all does surround around the tariffs. What's going to happen? What's the rhetoric? A little bit of noise here that they're going to resolve it, de-escalate, and all of a sudden the market loves that, and that makes sense. A little noise the other direction though, and we're right back to let's go buy our gold stocks and be safe again, right?
Yeah, Matt, thank you very much. Matt Kaser, president of FSA Valuation Service.